Good evening students, welcome to Vijetha IAS Academy. This is Mohammad Sahbaz Khan, Faculty of Economics at Academy. I have more than 6 years of experience into teaching and mentoring for civil service aspirants. As per my credential, I have done Master of Finance and Control. Alongside, I have also done postgraduate diploma in business finance. So today, I'll discuss an important economic terms. I would say this is a curve which is given by a famous economist whose name is Arthur Laffer. As the name suggests, this is called Laffer curve. So this curve was invented by an economist whose name is Arthur Laffer. This curve established relationship between tax rate and tax revenue collected by the government. According to this curve, it says there must be an optimum point where the government gets the maximum revenue. So you can see this is a graphical representation or the graph or the curve where you can see this is what initially on y-axis we have a tax revenue, on x-axis we have tax rate. So initially when the government increases the tax rate at let's say at 5%, the revenue collection at this level, at this point, we'll say R1. Again, the government increases the tax rate from 5 to 10%. The revenue also increase, which is R2. When the again government increases the tax rate to 15%, the government gets the maximum amount of revenue collection, and this is the optimum point beyond which exactly when the government again increases the tax from 15 to 20%, in this case you might have seen there is a decline into tax revenue collection to the government. Again the government increased this tax rate to 25%, you might see there is a decline in the revenue collection of the government. So this exactly tells you there must be an optimum point or the optimum tax rate where the government gets the maximum revenue. Fine. And why it happens at the psychological level, at the individual level, how households exactly function in this case, exactly when the government increases tax rate beyond a time, beyond a limit, you might see a fall in the revenue collection to the government, and it happens due to the tendency of evading the taxes by the individual or the corporates. At this point, it's become difficult for these households or the businesses to pay taxes to the government. So this curve exactly establishes relationship between tax rate and revenue collected out of this tax. So there must be an optimum point or optimum rate where the government gets the maximum revenue. Okay, so this is also comes into this the fiscal policy reform or the fiscal policy realm of the government. You might have seen when the Indian economy was having very high tax rate with respect to the corporates. It used to be 40 to 45% during a pre-1991 era. When the government resorted or the Indian economy changed its mood and on the eve of 1991, from here exactly India resorted to the LPG reform, which is liberalization, privatization and globalization. Since then the government has been declining or reducing this tax rate. Right now this tax rate is around 15 to 20% for the corporate. So this is a very much practical which could be seen all around the world into this political economy discussion. So this is what about Laffer curve. So stay tuned with more such lectures on this issue, on this economy. Thank you. Thanks a lot.